Hey everyone, welcome back to the channel. So it's got to feel really good when you're proving the whole world wrong in real time, just like the president of El Salvador. But today's episode is going to be a data-packed episode, as we're going to talk a ton about Bitcoin's price, a lot of the on-chain data that is very relevant as to what's going to happen in the near future, and some of the economic factors that are extremely relevant as well, and something you need to know that will definitely affect the markets and, what happens in the short and medium and long term. So if that's something you're interested in, make sure you stay tuned for the rest of the episode, and let's just dive right in. So the first thing I want to go over is Bitcoin's price. As we talked about yesterday. If you didn't watch yesterday, basically what I pointed out is that when we're on the 4-hour time frame, something we were seeing is that we had these gray consolidation zones. Now this happens all over the charts, not just on Bitcoin, but almost every asset. A lot of this has to do with short-term trading. Basically what happens is that you'll get this consolidation zone, or you'll get price coiling up, where for a long time, you basically get no price action over a long period of time. And then you start to get kind of this massive upturn or downturn in the markets. Well, we saw that over the past 4 times in Bitcoin's price, and we talked specifically about how Bitcoin can coil into this consolidation zone, and then it's probably going to pop and go somewhere. I thought it was going to go down to the 17,500 support level. Again, it's, sometimes you're wrong, but in the short term, it's honestly just a gamble. And that's something I want to point out, is that when you start to see these types of things, especially on the lower time frames, like the 4-hour, 1-hour, or anything below that, these are basically just short-term traders somewhat being degenerate gamblers. And I know because I use the short-term trade, and honestly, you can never predict where the markets are going to go. Short-term, it's much easier to do in the long term. But basically what happens is that you get such short volume. A lot of the times they'll wait for news events, they'll wait for big things to happen. A lot of the technicals play in, but basically what we're happening is that this was consolidating for a long time and it popped to the upside. Now I wouldn't get any FOMO. I wouldn't really rush into the markets yet. The biggest and best thing that can happen in the short term for Bitcoin is maybe it goes up to 22,000, but again, that's a very bleak future, and that's something I wouldn't be looking forward to. Now in the short term, that's definitely something that people are going to be looking into, but again, as we continue to coil in between these two resistance and support lines, I really don't see Bitcoin breaking out of this. And even if it does reach 22,000, we're going to have a ton of resistance, as we've seen in the past already. So definitely don't be scared if Bitcoin continues to rise. People saying that, oh, it's going to go up 10, 5%, whatever, in a short amount of time, because in the long term, again, the macro things are not looking good, and I really don't see it breaking above this resistance. And that really does play into some of the on-chain data that we need to talk about. So switching gears from the technical side to the on-chain data side, the first thing that I want to look at is the Bitcoin market value to realized value ratio. This basically looks at Bitcoin's price and then divides it up against a participant's cost basis in the entire network. Well, currently the price is around 21,000, or basically 20,000 as we're looking at right now, and then the cost basis is around 18, let's say 19,000. But the important thing is that we're currently around that price. So that's really important, because in bear market cycles, you can see that we get close and fall below that level, which is important because now, obviously, we've known we've been in a bear market territory. Again, but on-chain data helps us understand that and visualize it in a better way. But if we take a look at this is the MVRV ratio. During the bear markets, you can see that the bear markets typically last on an average of 224 days. The first one back in 2012 was 215. The longest was 2015 and 2016 at 380 days. And then we had a shorter one at 134 days, right around here. And this lasted a little bit. We had that spike up and then that quick dip from the pandemic, and then we rose again. Now what we're looking at is we're currently at 100 days right around here. So we still, from the least amount of time, we still have at least another month down here. And the longest, we have another 280 days. So there's definitely a massive range. But one thing I do want to kind of point out is that when we're looking at the MVRV ratio, the number here says 0.884, and the lowest from any of these went down to around 0.6, 0.5, and then the lowest was around 0.2. So we still do have a ton of room to continue to fall, especially looking at the macroeconomics. I mean, if you look at all of these dates, none of these dates we went through a recession, except maybe the COVID pandemic, but I'm not really counting that one. So we definitely have more room to fall, and I think more days to continue to be in this MV/RV ratio of an overcooled state. Now, shifting gears to the on-chain data of network growth. Now, you might not think that this is important. You might look at these charts and be like, I really don't care what's happening to the on-chain data. I just want Bitcoin's price to go up so that way my portfolio can go up. But these are very important things to also look at because this helps you understand what phase of the market you're in. And as time continues to progress, I don't think the market cycles are going to be the same in terms of the Bitcoin halving. Basically, what we're getting is 4-year cycles where we go through these boom and bust cycles. But I think as institutional money really starts to ramp up, as we hit our first recession, it's going to mix up these phases. And so it's not going to be your 4-year cycles anymore past this recession. I think it's going to be very different. And so on-chain data is going to play a much larger importance in the terms of Bitcoin's price. And the first thing we're looking at here is the network growth. Now, if we look at the last bear market, every single day we had around 66,000 new entities enter the space every single day, right around here. And we're basically at a low. The lowest we've been at this point was again in that bear market. But the difference is that we're holding at a high of around 83,000. So it shows even in this bear market, we're continuing to get more adoption. We're continuing to get more growth in the overall network. And again, you can see this play out in a little bit of a different model right here. So again, this is very simple to understand. When it's green, you get new participants in the market. Why? Because price is going up. And then as price tumbles, you get those new participants leaving the market. So then you kind of get an equalization of, transfer volume in the markets. But when it's orange, you get an equilibrium in the median transfer volume. This is when the long-term holders, the wealthy investors, the institutional money stick around and use the network. So this right here is when we start to see, those hodlers really take place. Then it always goes up, down, and then sideways. Currently, we've already gone up. We are in the down phase. And so that means we are now going to hit that equilibrium price, which means we could be going sideways in terms of network activity for a little bit. And not to touch on it too much, but basically looking at it in a different version, the same thing we just talked about, you can see that the duration last bear market lasted around 470 days, and the current one that we're at is around 426. So really not that far away from in terms of, network activity growing or declining, and we're kind of coming up on the end of that. And again, one important thing to remember is that this is your chance to take an action in the markets the same way that these long-term investors, these hodlers, these institutional investors do it in the same exact way. If you could see that the young coins are now currently only 13.8% of the realized cap. Basically meaning that a lot or the majority of the coins being held is by hodlers. And a lot of these hodlers are also smart money, they're big money. And so when the markets are down, they participate when the markets are at their lowest. So this is a chance to act like an institutional investor, like a smart investor, like a long-term investor. Because again, as we've seen in the past and as just common sense tells us, short-term investors and short-term traders typically lose money. Long-term investors, on the other hand, do the opposite. And again, as we're looking back into the past, when price is at its lowest, that's also when the young or short-term traders are also at their lowest. So this is a great time to take advantage of it and start acting like a wealthy investor. So to get away from the charts, to talk a little bit more about what's happening in terms of the kind of macro scale of things, which I think play such an important part because of this recession. Anything that happens in the macro, anything happens to the DXY will also partake in the risk assets such as Bitcoin and the entire cryptocurrency market. Now, currently what we're looking at is the DXY, which is the strength of the US dollar, which is very important to realize. So the first thing that we have to understand is that currently we are coming up on these early 2000 highs, which you could see here basically were the highest point since the 1980s. This basically happened again during the early 2000s recession. When you hit a recession, they raise interest rates and then the dollar gains strength. Well, currently we just blew past this resistance zone right here, which you saw twice hit in the early or the later parts of 2016 and then the early parts of 2020. Well, we just blew past it and we are continuing to rise to that level of 120. This is important because as the DXY gets stronger, so does the opposite of risk assets like Bitcoin. And one important thing is that when you're looking at the difference between the US dollar and all other fiat currency, everything is just pummeling against it. So what you're going to get is that a lot of holders in fiat currency like the Japanese yen, the Great British Pound, the Euro, they're going to start transferring everything into the US dollar, again, giving it more strength. As it begins to get a little bit stronger, Bitcoin's price in terms will then start to fall. Basically what we're seeing is that if you look at the USD JPY, again, USD is doing very well. If you go to GBP USD, then what we're seeing is that we're seeing the US dollar again being much stronger because GBP is falling against the USD. If we look at the Euro USD, seeing the same exact thing. So we're seeing the DXY absolutely gain strength here. And this is basically what we're seeing is that everybody that is holding, the yen, the Great British Pound, the Euro, basically any other currency is jumping ship and going to the US dollar because it's gaining strength. But in the back end, during the long term, we understand that fiat currency over time is just diminishing itself. It is inflating itself into thin air. And then what we have is Bitcoin, which is going to be the long-term solution to a lot of this. But again, this comes off of the heels of interest rates. Interest rates are really important in terms of the strength of the DXY. So what we're looking at is the FOMC watch tool. Now, if you're brand new, this is really important because as the Federal Reserve raises interest rates, that also raises the power or the strength of the dollar. And what we have is another 36 days until the next one. And what we're looking at is that they're assuming that by the next Fed rate on November 2nd, we're going to have a basis point rate hike of another 75 points, which you could see right around here. It should reach around 400 basis points, which just translates to 4%. Now, the reason I have a target rate at 5% is because if we go out to basically June of 2023, you could see most people believe that the interest rates will be at around 4.75 to around 5%. So that means we are basically just a little past halfway and we can still continue to rise. This is important because the Fed has talked about front loading a lot of these interest rates and they've never done it this fast in history. So when they talk about us trying to have a soft landing, not trying to squeeze out a recession, things like that, I just don't think that's going to happen. But again, it doesn't matter if we think we're in a recession. It only matters if the Fed thinks that. And the Fed is a lagging indicator. So as of right now, they don't think so because when you're looking at interest rates, they're still low. Unemployment is still low. And even though people are feeling the pain, the Fed still is going to do what they want because unemployment is low. And they, again, have a target rate of getting that inflation down, which again is their main priority. So basically, to sum this up, as we look at the DXY, as the DXY continues to grow in strength, that is because interest rates are going to continue to go up because inflation is still high, unemployment is low, and as the Fed is concerned, we are not in a recession. Even if you think that, the most important person, or the most important people that need to confirm it is the Fed, because that is who is going to take action in terms of what they do with their monetary policy. And again, whatever they do is going to in turn affect what Bitcoin does. That's why it's so important to understand what's happening on somewhat of an economic scale, because it does really affect these risk assets like cryptocurrency. So in the long term, as we're looking at price, as we're looking at what could happen to Bitcoin, if we zoom out a little bit and just take a look at the long term, honestly, when you're really looking at it, I think a possible area that we could definitely drop down to, which does sound hard for a lot of people, is maybe even a level to definitely below these lows at 17.5. And I think what we could see is maybe even a drop to around that psychological number of 15,000, possibly even lower to these lows, right around 13 to 12,000. That's my personal take on it. that's when I really want to start buying into Bitcoin heavy. I do own an okay amount. I wish I could have definitely bought earlier and a little bit cheaper, but again, I'm just waiting in the markets because I'm happy with what I have, the bag that I have now. But I do understand that prices are still going to continue to drop because the near future and the medium term future don't look too promising for the economic world. And again, economics definitely are driving these markets. So that's why I'm just on the sideline holding cash until prices continue to drop. And the last thing that I want to talk about is that Australia just published a CBDC white paper and pilot program that they're going to be revealing in the early parts of 2023. Now, it's important because this is only going to be a 1-year effort, and they talked about that just because they released this white paper, it's not going to be a guarantee. It's only an experiment to see how it works out. But this is important because as these continue to wrap up, you're starting to see more countries continue to take this course because they understand that, one, they understand that cryptocurrency is here to stay in the long term. 2, they want to do something about it. And 3, they don't really know what to do. And so they're starting to roll out their own central bank digital currencies, which is basically fiat money digitized, which again, we know does not work. So as they're trying to figure out alternatives, as they're trying to figure out their own way to go about it, we have basically the ultimate blueprint, which is Bitcoin and the cryptocurrency market. But as we continue to get these regulations and these laws favoring cryptocurrency, in the long term, it's only going to help us out. But that is everything that I have for this video. If you guys enjoyed it, if you found some value from it, definitely leave a like and comment down below. And if you enjoy these market updates on a daily basis, I would really appreciate if you guys could subscribe and support the channel down below. But until the next video, see you guys then. Peace.